think the new color is green. And I think it's always been green.
Yeah.
I think slavery was about money, about economics. Nobody's going halfway around the world to drag you here because they don't like you. In fact, the concept that we were dumb and stupid is ridiculous. We were agricultural geniuses.
Yes.
And what they needed was experts in the land. How do you take dead land and bring it back to life? How do you nurture it back to life? Well, we worked in that direct sunlight, and we brought that land back to life time and time again. And we were geniuses of the land in an agricultural economy.
Right.
And so we built this country really for free.
Wealthy people do this one thing for generational wealth. We get a trust and we get life insurance, proper life insurance that you can borrow against, bank it bankable, protects your assets, and upon your death has a huge death benefit. We all do it. We all do it really well. And we fund our trust by having almost everything we own inside corporate structure. The corporations are held by trust. The trust is loaded with insurance, and upon your death, you load generational wealth. The other one thing that goes right with this is just your legacy, your mission, your values, teaching these kids. No trust fund babies in our world. They're actually responsible, contributing people who are going to continue your generational wealth beyond 2.3 years, which is the current statistic. Don't be a statistic. That's a choice.
This is legit, Zephyr verified. Those in the know understand that wealth has three phases: wealth creation, wealth accumulation, and wealth preservation. And the wealthy absolutely do use these tools, trusts and life insurance, in order to create legacy. They do that because they're perfectly situated to help you figure out exactly how to safeguard the resources you work hard to create during your lifetime to ensure they're there for those you care about and the causes you care about after your passing. Now, a trust and life insurance is not a particular channel that only the uber wealthy can take. Anyone can leverage these particular strategies. You just simply need to learn what those strategies are and go out and find the financial professionals in your life that can help you navigate those waters. But don't wait until tomorrow to do it. Be sure to start today, because those who fail to plan to fail.
Let's just say you got $10,000 sitting in your bank right now. Banks on average give us -1%. If I went to the same bank and asked them, hey, can I borrow $10,000? They probably would charge you anywhere between 10 to 11% interest. So I got a question for you. Would you rather put monies in the bank and get -1%? Or would you rather put your money where the banks put their money and get unlimited compounding interest? Comment below. I want to know.
The more I've been around multimillionaires, decamillionaires, and billionaires, I can't think of not one of them that do not have a life insurance policy. Here's my policies. This is not for my clients. This is for ourselves. My wife and I got my own family trust right here. This is a copy of it. The original is in our safe. But the reason why I keep it here at the office is because as I travel, something happens to me, people know exactly where my money goes. But this is where my life insurance policy goes. This life insurance policy, something happens to me, boom, it forms a trust. My money goes inside this trust. Boom, my kids now are official trust fund babies. See, that's how millionaires think. It's how do you create wealth? How do you create, more importantly, this funny word called generational wealth?
I was 23 when I purchased my first life insurance policy, and now I'm 73 years old and I'm still paying the same rate?
I don't know who needs to hear this, but the only two things guaranteed in the world, in the life today in America, is death and taxes. So I want to introduce you to tax code 7702. IRS tax code 7702 is a tax code that is designed to pass on generational wealth. And how is that? The tax code 7702 is a tax code specified specifically for life insurance, annuities, IULs, EIAs, and other insurance products that will guarantee that you'll be able to save your money tax-free and then pass it on from one generation to the next tax-free. Now, why is that this is not taught in schools? That's my question. You done went to school from elementary school all the way to grad school, and all you know how is to have this degree and to be in debt. But they don't teach you how to balance a checkbook. They don't teach you about personal finances. They don't teach you about the tax laws. Why is that? A nation that does not understand tax laws will always be overtaxed. Again, ladies and gentlemen, I don't know who needs to hear this, but I want you to understand. A 401k is like an IOU to Uncle Sam, who's not really your uncle. So listen up. You can't compete with these facts. The biggest risk to your retirement plan is called a tax rate risk. You want to know what I mean? Is that over time, the taxes is going to definitely increase. At the end of 2023, America's debt was like 34 trillion. See, inflation is taxation without legislation. So when you hear about the feds playing with the interest rates, now you know how that affects your dinner plates. So if you need some kind of protection, a way to fight off inflation, you want to know how you can hold on to your savings and protect your investments, I encourage you guys to learn about IRS tax code 7702. I can't make this shit up. It might not be for you, but I know who it was for. It was for the Waltons. It was for the Rockefellers. It's for the Trumps. It's for the Kennedys. It's for McDonald's. So why do they use it? They use it because it's the tax laws on the book. Do you remember a couple of years ago when Trump was running for presidency and Hillary had him backed in a corner? And she says, this man did not pay taxes. He used the tax laws on the books to not pay taxes. And they asked him, hey, Donald Trump, is this true, sir, that you used the loophole in the tax system to not pay taxes on $1 billion? And what did he say? Yes, that makes me smart. Why is that, guys? Because the tax laws are the tax laws, and they're on the books for a reason. They tell you to get a 9-to-5 job, work for 40 years, and put your money in a bank where you only get 0.001%, while they put their money in a 7702. They get 9 to 15% uninterrupted compounded interest on their money, while you still don't know how to balance a checkbook. Guys, listen, maybe it's not for me, maybe it's not for you. I don't know who needs to hear this, but if you are that person that I'm speaking to, just go ahead and comment 7702 and I get some free information over to you. Free game, y'all. Peace.
Are you approaching retirement and you're concerned? Number one, my money is not enough. And number two, you're concerned about the safety. If that applies to you, I have great news for you. There is a plan within an annuity that allows your money to be safe. And in addition to that, your money is actually insured, meaning this, that you'll continue to receive a check for the rest of your life till the day you die, so you don't have to worry about running out of money in your retirement years. If you want to know about how this works, just DM me so I can share more information with you.
Assets are what creates wealth in this country.
Yeah.
And I made this mistake for many years by not knowing this part of business. We always hear that the rich don't pay taxes. Well, let me explain what that means in regards to assets. The two biggest forms of assets in this country are stocks, public companies, and real estate. The reason why the rich, they claim, don't pay taxes is if you bought $1 million worth of Apple 6 months ago, it could have went up to a certain amount, but let's say your $1 million goes to $2 million. What somebody does, or whether you bought a house that was $1 million and it went to $2 million, especially during COVID. What somebody does with the stocks, they go, I'm going to go take out margin, which your $1 million goes to $2 million. That means the investment was $1 million. You borrow margin from the bank of $1 million. You pay 7% interest on that, but you do not pay taxes because it never was taken out. And what people do with that is they go, more stock, same with a house.
Yeah.
More. And that's what happens. You can do that if you have $1,000 worth of Apple that went to $2,000. You can do that again and again and again. It has nothing to do with wealth. Yeah. It has nothing to do with position.
This is legit. It's ever verified. Financial literacy is something that every single one of us should be focused on, but unfortunately, the modern education system isn't set up to teach us. You see, there's a big difference between assets and liabilities. Only one of them generates cash flow for you, and only one of them can put you into a position to create real financial freedom, and it's not liabilities.